Yes, so first of all, I'd like to invite Mark back to the stage and have a seat this time. And I'd also like to invite Torsten Duwenhorst to come over as well. He's the Asia-Pacific Head of Forensic Technology for KPMG. Some of you might know him. Gentlemen, thanks very much for joining us today. Maybe we might start off with, and I would say to the audience too, we've had a look through the list of attendees. It looks like a lot of people from some very intelligent organisations and what have you. So if there are any questions from you at any time this evening, please put your hand up. We've got two very knowledgeable people here who I'm sure you should definitely try and squeeze all the information that you possibly can from them. So we might just start as a big overview, a big general thought. Big data and analytics in fintech. Has it arrived? Torsten.
I'd say yes. Obviously, there's not 100% yes or no answer. You will find big data, for example, in social media. So you talked earlier about the various data sources you have. Depending on your the size of your operation, you will have some form of big data. But more importantly, what do you do with all the external data that's available to you? So if you're looking at customer experience, the way we interact with clients as a bank, the disruptive forces that come through new payment systems, how do you understand what your customers are saying about you? So social media being one of the sources to interrogate, that is big data. You know, how do you create, not just collect all the data you can from social media, but how do you create insights from that? And for that you need analytics to really distill what you're looking for.
Yeah, no, I mean, I would also say yes, but with the caveat that I was trying to explain, which is I think that certainly I don't have a crystal ball about the applications that are going to be the most revolutionary. We don't really quite yet have that killer app that is obviously going to turn over a lot of the existing structure in markets. I mean, I think probably the closest thing to that is the use of unstructured data to begin to understand sort of very early signals, very weak signals of changes in markets that will be big. And you know, certainly you can see a raft of hedge funds that are starting around using data like that, trading strategies based on those data. They're getting nice returns, and because they're doing something that's not widely understood, it's quite different.
And within that, that sort of, I guess, this foray into that sort of area, I mean, Torsten, you were sort of talking about using a lot of customer data. Is that sort of, I guess, the, you know, where the low-hanging fruit is at the moment? I mean, or are there bigger gains to be made through, you know, more complicated sort of areas, I suppose, as Mark was saying?
I would say that the more complicated side of data really is your legacy systems. If you're looking at what's happening in the financial services sector, I think everyone understands there's new data sources, there's disruptive technology you want to essentially deploy, but how do you do that with your existing infrastructure? How do you apply analytics to the, in most cases, siloed sources that you have sitting in a financial organization, create that, not just even a data warehouse, but a data lake to be able to use structured, unstructured data to come up with the answers. I think that's the biggest challenge right now. It's not so much spending money on, say, a fintech startup to integrate this, or buying external data sources to create more insights with the data you have to enrich your data, but really, what do we need to do to get to the next level of the intelligence that we want to create on an ongoing basis, and not just ad hoc and reactive.
What are some sorry, what there are some specific things that you've been doing to harness this data lake that you were speaking of? Was that sort of classified information?
No, maybe to give an example of what we've seen in the market, so not just talking about our clients. Someone like a Ping An, a big insurance company in China, you're looking at, again, systems, and these are fairly young companies. Now, these are not your, say, HSBCs of the world that have been around for over 100 years. For them to create new products in the digital insurance space, they decided to basically set up a new company with new technology. And they were able, because this is now an online business, they were able within 18 months to create or to attract 150 million new customers to that new business. Would you be able to have or to do that with an existing organization? I highly doubt that. So that's certainly one approach that we've seen.
Mark, did you want to add?
Well, I just think that back to this question of disruption, people have for a long time thought about, what are the kind of governance models for getting the most out of a new thing that might be coming at you. And Torsten and I quite agree that it's a major challenge to just reform an existing mature set of infrastructure and capability in people. And there are just times when it's probably better to do kind of a competing set of operations, and if the new business begins to have traction, you can decide how you want to integrate it. There was a case recently that I came across where it was another insurance company that had the opportunity to take a position in a startup that was relevant to them. They bought the company, they paid $700 million for it, and they took a big chunk of their own operations, combined it with that, and they spun the whole thing out to be a much larger organization. So that the part of the operations they had, and this is what I liked about that case, it was sort of an innovative, not just start it and leave it outside and hope that it comes back, but they took a very sort of surgically select piece of the existing organization, combined it with the startup, and they put all of that outside the firm. With its own stock, with incentives that were in place there for the acquired company, for the employees that were joining this, this new co that they created out of that. And increasingly, I think that models like that make a lot of sense.
Maybe another point to that, and I think that's what we've seen as well. It's not so much about integrating a startup or a disruptive company into your existing organization, but how do you ensure that the disruption continues to happen? Don't make them like you are. You want to be different, or at least a part of the business to be different. That's the trick. And either putting it into a separate entity or really keeping them at least physically separate is what will help you to make sure that the disruption actually is going to help your business.
Okay, well, maybe one thing too, because we obviously are, I guess in the centre of Asia here. Both of you are working in very different environments, very different locations. How do you see, differences in the adoption of fintech and data and analytics in the two cities that you're both working in? And I guess, what sort of approaches do you sort of see? Maybe Mark, we start with you from the more foreign view, I guess, but.
Right, and I wouldn't be able to give a compare and contrast because I don't know enough about Hong Kong, but I can say a little about London. And you can tell by my funny accent that I'm not from London. So I've come to London from California, and I mentioned earlier that I had a job in a startup that was in Santa Clara in Silicon Valley. Increasingly, the sort of Silicon Roundabout area of London and all of the activity in fintech really reminds me of my early days in Silicon Valley. It's a very dynamic environment. There's a lot of capital, along with a huge talent pool. The kinds of things that if you know the stories of the early days of Apple Computer, Steve Jobs and Steve Wozniak came along and demonstrated their fledgling project to a computer club. And these organic meetup groups were a big deal back then, and they still are now. And in London, we have exactly the same thing. So I get emails from multiple different meetup groups that meet. Fintech is a big one. Data and analytics sort of horizontally is a big area. So I think what you see that's really cool is a robust ecosystem where, designers, people that are working outside of established career paths, thinking about doing startups, are interacting with people who have money and people who are kind of, nerdy, thinking about maybe impractical stuff, trying to figure out what the future might look like from an academic perspective, and it ends up being a pretty cool nexus. I'm not sure that we've seen yet, we haven't produced like the Google, that comes from all of that, I think it's probably a matter of time.
For us here in Hong Kong, I think you're looking at 3 different approaches in the region. So you're looking at Hong Kong, where we have a number of different incubators, accelerators, and it's all driven by the industry. So for fintech, one of them is the DBS accelerator. You have the AIA accelerator. There's a couple of others outside of the financial services space, which is basically providing these startups with an environment to experiment, to shortlist them, to see whether or not their ideas are working, whether they actually can build up a customer base to make it viable. The Singapore approach is very different. Singapore essentially sponsors the individuals or the companies. I believe they're paying 50% of salaries, which makes it a very different proposition because you're potentially keeping startups alive that actually don't have a viable business model. So Hong Kong's approach is very different. Hong Kong is now putting much more structure around this by providing more of a system that allows startups to come to Hong Kong. Just think, for example, about visas, right? Coming as a startup to Hong Kong is a problem because you don't have a proven business, therefore you can't get a visa, therefore you can't be a startup. It's kind of a chicken and egg discussion. In mainland China, the government is essentially providing space to startups. So if you just go across the border into Shenzhen, if you're looking at startups, which is mainly around IoT, Internet of Things, you're looking at, well, we're not going to give you money and there's no industry to help you, but we'll provide you with space to set shop up in, literally. You're looking at startups, say, in Sichuan province, where the government actually is starting to invest into these startups when it comes to, for example, credit rating, risk rating, where alternative data sources are being used, similar to the Facebook and Google approach as well. How can you risk rank someone who wants to have a loan when they don't have a credit card history, right? So different. Have we seen the big ones here yet? No, but we're seeing, for example, more and more money coming into Hong Kong. So KPMG recently was hosting a member of the Saudi royal family who is looking to set up an investment fund here that specializes in fintech. So we do see more and more of this happening in Hong Kong. Hong Kong trying to keep talent in the city. We don't want to lose it to Silicon Valley, frankly, or to Singapore. And Hong Kong needs to reinvent itself again because there's more and more mature FS services in mainland China. And what are we going to do to stay relevant, which is fintech, startup, disruption?
Yeah, I might just add, because you helped me realize that I can say something comparative. One of the things that's quite distinctive about London and difficult in terms of being a startup environment is it's very expensive to locate there. So Imperial, we have a venture fund. It's not sort of a guarantee of funding. It's a competitive model, but it's really hard to just domicile these young firms and give them places to be because it's so expensive in London. In terms of the brain drain, the loss of firms to other locations, that's still an issue in London. And if you've got a firm that's doing something that's quite it has a real possibility of scaling enormously, there's still a pull to go to California. But it's the less talked about kind of really cool quanti fintech stuff, I think is going to probably end up staying in London because it's a really fertile environment for that.
Maybe just one more point to this one. Sorry, it's kind of yeah. It's I think the beauty as well about doing this in Hong Kong or mainland China is you're living in your test environment. If you're looking at, and we a few weeks ago we released our China Connected Consumer Report. If you're looking at the way that consumers in China have adopted new technology, so essentially the online shopping, spending your income through your mobile phone or iPad is just tremendous. Half of the spend for luxury items now happens online, which has a massive impact on a number of businesses, obviously. But we're seeing now companies coming to Hong Kong and China saying we want to do e-commerce, we want to learn about it because, frankly, the China market is years ahead of what we're seeing in Europe or in the US. So coming here is you're coming really to the epicenter of fintech or anything disruption or startup in Asia Pacific, whether it's software, whether it's hardware. You essentially you design here, you can build hardware just across the border, you deploy here, you have consumers that are immediately taking technology in and playing with it, using it, and you immediately or in very short time will notice whether or not you have a viable business idea, whether it's software or hardware. This is the place to be right now.
I'm going to grab somebody as a show and tell. Okay. You start a next question, but I forgot.
I'm almost tempted just to wait till this comes back, really. Like
I was just going to say, so one of the interesting things about being in London is that the links between the UK and China are getting stronger. We had a visit from President Xi to Imperial College 2-3 weeks ago, and last week I was at this program. You're not going to be able to see this, but this is a book of all the people that came. The China-UK Big Data Summit. We had a number of really senior academics from China that came. We all spent a day together. We all had a meal in the evening, but it was really senior people from both sides. And one of the questions that came up during kind of a Q&A session was, we asked, so the UK government helped put this together, and somebody asked, so you're here to build relationships with the UK. Are you doing something similar with other countries? And there was kind of a confused answer, and it didn't really sound like it was a super clear yes. And then somebody quite pointedly said, are you doing things with the US? And it was sort of an awkward silence, and the answer was, no, we're not, and we're probably not going to. But at the same time, there are tons of organic connections between these senior Chinese academics and their former students. Many of them would have been educated also in the US. So it's a very interesting time to be in this space where there are these connections that are being made in new ways. And as your point about payment, there's some stuff, for example, around the self-driving cars that's being done in China that is ahead of other places in some ways, because there's a blessing to say, sure, experiment all you want, like crazy. And even though I think California's been very liberal with that, the permissions being granted to do that accelerate things very nicely.
Torsten, you don't have anything to tell the audience as well?
No, we didn't bring anything. We have a couple of surveys, obviously the general analytics surveys, but I think the China Connected Consumer, we didn't bring it tonight, I believe, but we're happy to mail these out. This is a really interesting piece of research we did. We interviewed about 10,000 mainland Chinese consumers about their spending patterns and where we believe the market is going, and this is it. So I guess no.
We might just turn it over to the audience, perhaps, just for a moment, or at least put it out there if anyone has anything that they might like to ask specifically at all. Anyone? Bueller? No? Okay. Well, we maybe just one thing, if we start to sort of maybe start to wrap things up a little bit. For anyone like an incumbent company in the financial services space, what would be the main thing you think they need to do, or the main steps they need to take to better integrate data into their operations? What sort of pitfalls might they be sort of facing, and maybe what would be the trade-off, the benefits that they would sort of had from bringing that in? I mean, Torsten, from your experience, what would you sort of advise to anyone who's trying to bring that on board?
I guess there's many things you could do, and there's many challenges that you'd face. But one of the things that we are seeing really taking off now is the use of cloud technology. If you're looking at large data volumes, the computing power that you really need to go through large data sets, is it realistic that you build everything in-house these days? I don't think you have to anymore. Looking, and we had recently very interesting discussions. We've now partnered globally with Microsoft. So for us, the use of the cloud is a given. The question is just, when are you going to do it? Obviously, whether it's KPMG or banks that live in a highly regulated world, the discussion really is, okay, how can we make this happen? But I think the question is, and that goes back to your earlier IT discussion about how to do big data. The question or the answer is not longer, cannot do. The question is how you IT, how can you help us to make this happen? What do we need to do? What is the discussion that we have to have as a financial services organization with the regulators to explain why we think we need to move into the cloud? Because again, to give a simple example, we've in the US or in one of the American countries, we recently built a environment to run a Hortonworks, a large Hadoop platform. Just to do that, hardware was about $1.5 million just to run this. That's a test case, not even a fully working environment. If I was to do this in the cloud, monthly rent for this for the virtual computers and space might be $10,000. So that's a no-brainer to me, right? I think that's one of the challenges. If there was something I was to focus on, one of the things certainly would be cloud, and how can I make that happen?
Yeah, cloud is a huge thing. I'm reminded of a story of a colleague of mine from CSC who, in around 2007, he was having lunch with the president of CSC at that point, and he had just come from a meeting where he'd heard about Accenture having done a project for the Hillary Clinton campaign. She was then, as now, running for the nomination for a Democratic candidate for president in the US. And they had, for like $10,000, they had, no. I'm anchored by your 10,000. It was less than $1,000. It was like really cheap. They had given them 100 servers for 60 days, brought up a whole bunch of data, and then shut it down. So it's incredibly cheap. So my colleague brings this to the CEO of CSC and was like, wow, this is amazing. And he goes, why would I want to be in that business? I just signed a $2 billion outsourcing job with some big financial services institution. The reason you want to be in that business is, fast forward, in the last year, CSC has lost 25% of their revenue, which is giant. And it's because the business that they had built up about outsourcing, which was a lot around kind of data warehouses and a lot of sort of more now kind of outdated practices, they didn't actually make the leap. So you not only can't leave it to IT, but sometimes you can't leave it to your IT outsourcing partner, because the landscape of all this is changing.
Mark, that might be a good opportunity to come back on, obviously, what you were saying in your presentation about, leaving it sort of departments. What are the difficulties, I guess, in convincing, leadership up the line on the benefits of, integrating this sort of, analytical approach? I mean, in your experience in the companies that you've dealt with, Torsten, in what you have to deal with, higher leadership, are they generally responsive to this sort of idea? Or, for example, are there a lot of fears around regulation that maybe sort of make them a little bit hesitant to move quickly? Perhaps they already think they've got a golden goose that they're already with at the moment. So I don't know, how willing are those sort of higher echelons of rank in an organisation to move with these themes?
I'll guess again, it swings to both sides. I think part of the discussion is education still. We need to explain why, if we are staying with the cloud example, why we want the cloud, why we need it. We can do this in two ways. We can basically, it's show me the money. What is it going to cost you to maintain your system? What do you need to do with the existing infrastructure to actually get to where you want to go? So what's your vision? And what is it going to cost you to actually transform the business to where you think you might want to go? And what does it cost? And what are the costs compared to that if you were to go into the cloud? And and if you're looking at time frame, assuming that you have a greenfield start in the cloud or any new environment, how long would it actually take you to get there, right? And things you can achieve. I think that's the discussion. Yes, but there definitely still is education to be done, because over the last years, the discussion about the cloud hasn't really been very helpful. You had the private, you had the public, and what have you. So it's a bit like the Bitcoin or the blockchain discussion. When people say blockchain, they think Bitcoin, they think money laundering, Silk Road, you name it, right? But that's not really the discussion we want to have anymore. American Airlines, for example, has adopted Bitcoin as a payment offering, so you can actually use Bitcoin to pay for airline tickets. So the question, I guess, is, maybe to my earlier point, what do you say to business is, you want to be an early adopter. You don't want to follow. You want to be the one who writes the book on the cloud or Bitcoin or what have you to drive the business, because at the end of the day, it's going to happen. This is not a fad. It's here to stay. And in my opinion, you want to be an early adopter doing this.
Yeah, I think the only thing I would add to those points, which I agree with all of, I'm sometimes disagreeable, but I'm just not managing it tonight. I'm sorry. It is a lot about education, and it's a lot about how you do the education. So the things that my colleagues are going to talk about from executive education in a moment start to get at kind of more experiential ways of being able to see the impact of what you're trying to ask people to do. And we find that for this particular issue about, you know, how you, for example, get a business unit to embrace data and analytics, it's really important that you not just be educating the IT people how to speak to business people, and not just educating business people how to understand data and analytics. You kind of have to mash the team together a little bit, because unless you start to build what we call absorptive capacity between these two different skill sets, then you don't really have the ability to kind of make decisions where all the different parties that have to collaborate and come together start working together. So the idea that you can't just leave this to IT, it's not that you don't want IT, it's that you need to work collaboratively with IT, so that the brainstorming about how you're going to take cloud and turn it into a business proposition that's going to save you money, as opposed to just write a check to the IT department to go build a cloud infrastructure that you don't know how you're going to use it. Well, it's that difference that's the difference between spending money and not getting a return versus actually having a team that starts to produce real benefits from these technologies.
Okay, well, if there aren't any more final questions from the audience, we might wrap that up there. So I'd like to thank Mark and Torsten again for their time. I think we're going to move over to something about the performance simulator, which you'll check out. But I think, James, you're looming large. Come here and grab the microphone from me. But again, Torsten and Mark, thanks very much for your time. Thank you.